We are extremely concerned by this. Let's see how this day plays out. I mean, Canada is the fourth largest oil exporter in the world. I don't need to tell you that. Days like today are not easy.
Canada's economy has been hit with a double whammy. First, a global coronavirus outbreak slashed demand for oil. Now, a fight between two oil countries has sent the price tumbling as much as 31%. Here's that oil price war explained. OPEC is an organization made up of about a dozen oil exporting countries. Saudi Arabia is considered the leader. Russia isn't a member but became an OPEC ally in 2016. Together, they're known as OPEC Plus. Last Friday, all the members met in Vienna to talk about scaling back oil production because the world, and especially China, is using far less oil amid the coronavirus outbreak. OPEC nations wanted to cut output by 1.5 million barrels a day, but Russia said no. In response, Saudi Arabia one-upped Russia and over the weekend removed all limits on OPEC's oil production, essentially turning the taps to full blast to flood the market and drive oil prices down to painfully low levels. Both the federal and Alberta budget projections depend on a much higher price of oil than today's. So if those prices fail to recover, how much of a hole could those governments be looking at? And what does that mean for future planning? Don Drummond is a former Associate Deputy Minister of Finance. He's now the Stouffer Dunning Fellow and Adjunct Professor at Queen's University. Joining us now from Scottsdale, Arizona. Mustafa Askari is the former Deputy Parliamentary Budget Officer, now the Chief Economist at the University of Ottawa's Institute of Fiscal Studies and Democracy. He's here in studio. Hello to both of you. Thanks very much for making time for us.
Thank you.
You're welcome.
Mr. Askari, why don't I start with you? Can you help quantify for us what a drop in oil, the drop that we saw today in the price actually means for, let's start with the federal budget.
Yeah, the rule of thumb is roughly about $10 decline in oil price would cost the federal government about $2.5 to $3 billion on the bottom line.
Okay.
So now we have seen something like $20 decline. So that's in the $5 to $6 billion deterioration in the fiscal balance on that basis. But again, these are rough numbers. Yeah.
And let me ask you, though, because we're seeing that drop, let's say, today. The budget isn't going to come out for a while. How does that, I imagine they don't just say, oh, we've lost $6 billion today, and they factor it in. Is it, what kind of price do they look at, and where do they find that?
Well, they have to see how the markets are actually projecting the oil prices in. The prices may come back in a week. So they may look at the future prices, and then they do their projection and their forecast on the basis of future prices. Yeah.
Mr. Drummond, it's not just the price of oil. Our viewers will be familiar with what they watched happen all day at the markets among, a whole host of different financial indicators. What is your takeaway from what you saw today?
Well, I'd be very worried in a number of fronts because the federal government doesn't apply royalties to oil. It's not as sensitive as Alberta, for example. But some of the underlying factors are very important for the federal government, particularly under the expected weakening of the economy. In the fall update delivered in December of last year, the expectation for growth this year is 1.6%. There's so much uncertainty, but there's a growing fear that there could be a global recession. Canada has never avoided a global slowdown like that. It's always affected us. We could well see less than 1.6% growth. If you look at the reaction of everyone's talking about the stock market decline, but look at the bond market. Long-term government bonds are almost at zero, which of course saves money on financing debt, but it's just a symbol of how pessimistic people are on economic growth. That more than the price of oil would actually be worrying me. To the point, I think deliberation should be applied to maybe delaying the budget a bit to just see how things shake out if there's any greater certainty that comes in the next weeks and months.
Let me follow up with you for a second. How much of a delay do you think would help mitigate some of that?
Well, you like to get them in before March 31st. That gets the mean estimates and the spending authority. It's nice for the provinces to know what their transfer payments are going to be, but you can certainly give them those numbers to the provinces outside of the budget. We've certainly seen federal budgets go into April before. I would be tempted to give that. But the biggest question, bar none, should the federal government here in Canada and elsewhere actually be applying fiscal stimulus? We've seen a monetary policy response, possibility another, and we know that's not going to do very much. Interest rates are almost as low as they can possibly go. If that's not going to do the trick, cutting them a bit more is not going to do the trick. if the economy around the globe and in Canada, the United States is going to head to a recession, I'm not saying that's clear yet, it's very uncertain, but if it is, there might have to be fiscal stimulus. And that would be very hard to deliver. The federal government's looking at 25 billion plus deficits. You've got big deficits in Alberta and Ontario. Talk about Alberta for a moment, trying to balance their budget. They are the most sensitive to the oil price decline. How difficult it would be them to apply fiscal stimulus. The Ontario government's got more than its hands full trying to get back to a balanced budget. Not sure that they're in a position. And I think that's one of the reasons why markets are so pessimistic. It's not just they worry about the weakening economies. They realize that combined, the federal and monetary authorities don't have very many weapons they can apply.
Mr. Ascari, let me ask you to weigh in on that question, because what I heard from Finance Minister Bill Morneau today very much speaks to what Mr. Drummond is talking about, and that is almost laying the groundwork for some kind of stimulus, reiterating over and over again that he believes the government actually does have the fiscal capacity to provide that stimulus. What are your thoughts?
I think stimulus is coming. I mean, I heard Minister Monroe as well, and I think it looks like something is going to happen. The first quarter and second quarter are going to be weak, definitely. I mean, we know that based on what has happened so far. And so the question is to how far. If it gets into a recession, then the government may be forced to provide some stimulus. And despite the fact that they are running a $25 billion deficit, but still, if the measures are temporary and targeted, and they can manage that somehow and show that over time they can unwind those, I think there is enough room there.
So what does that mean when you talk about measures that are temporary and targeted? What's an example of that our viewers would understand?
Well, it could be just targeted tax credits for certain groups of people. I mean, in 2009, we saw the government provided the home renovation tax credit, which was temporary, and they provided some stimulus for. There could be other kind of short-term measures that they can unwind over time and make sure that they can go back to their deficit profile that they had in mind when they were considering the budget. So those things are possible. We're going to see the to GDP ratio going up if they do that temporarily, if they unwind those measures.
Mr. Drummond, when you're looking at the possibility of stimulus, what sort of things would you be looking at, and how difficult might it be to figure out what is best suited, since we're kind of at the beginning of figuring out what the potential impact of everything that's going on with coronavirus actually will be at the end of the day on the economy?
Well, the standard for short-term fiscal stimulus is to accelerate infrastructure programs. But there's another example where governments don't at the moment have a free hand. They're having difficulty unrolling the existing infrastructure plans. There's obstacles in getting the federal money out and the provincial money out, getting environmental assessments, gets projects going. I'm not sure there's that much scope to put out more in the short term. So it really, as Mustafas indicates, it's temporary tax cuts. And of course, then you have the danger some people save them and they don't necessarily get in the economy. But just to throw out a bit of large numbers, to do anything meaningful, you really need to do at least 1% of the gross domestic product. That's $20 billion. So you're already looking at 25 plus billion deficits. Are, as a government, comfortable? He says they got the fiscal room, but are they comfortable, at least temporarily, seeing that to go to 45 billion? Remember in 2009 when the G7 got together and decided they were going to apply fiscal stimulus and then brought in the G20, the recommendation was 2 to 4% of gross domestic product. The equivalent of that in Canada will be $40 to $80 billion. And Canada did in that range back at that time, and we saw really large deficits for a short period of time. I emphasize a short period of time because then the debt ran up and they got very nervous about that.
Do you expect to see, so say they decide to do this kind of stimulus, would you expect, Mr. Ascari, that to happen in the budget? We also saw signaling from Minister Morneau today that the budget isn't necessarily the place that all of this would happen.
I mean, it could be either way. I mean, they can do it in the budget 2009. The government did it in the budget 2009 at the end of January. But as long as they show in the budget, that's just the profile, that they can actually show that separately relative to what they normally do and show that they can unwind those over time, so give people some confidence that numbers are going to go back to their sort of normal track as far as the budget balance is concerned. I think it can be done within the budget, but I agree with Don. It's probably a good time to actually delay the budget, do this thing separately and delay the budget and see what happens to the economy.
Mr. Drummond, I'm out of time. I just want to ask one last question to you. What do you think the likelihood of a recession is?
I think fairly low. I still do have a feeling that this will probably not have as dire economic consequences as we worry about and as time goes on. And if, this is probably what we should be debating more, as a response to the health authorities and the policy authorities on the health side, if they can contain this, that hopefully there'll be a greater confidence in the economy, because I keep coming back to it. If it doesn't work that way, there's not much that can be done, not monetary policy and fiscal policy. So we better put all our eggs in the basket of containing it from the health side.
Mr. Ascari, your thoughts on the possibility of recession?
I think I agree with Don. I think it's probably low right now, but we can't avoid that. There is going to be a global slowdown, and we are going to see a significant slowdown in Canada. Whether it's going to get into a technical recession or not, that remains to be seen. It doesn't really matter whether you get close to below zero or get close to zero. It's still a slowdown, and it's going to affect the economy.
And how, I guess, what's the timeline in trying to figure out, and I know this is difficult because it's not something you can easily predict, but I think there are a lot of Canadians wondering if this is going to get worse, how much worse is it going to get? What is the timeline for sort of figuring out, following the slow growth we saw in the last quarter, if we're going to see further stagnation or worse stagnation?
Well, we're not going to see a lot of numbers that will tell us that. I mean, we are going to see an employment number next month, in a month. And some of the other indicators, they're not enough. But there will be a sense, if we see globally there will be a slowdown, significant slowdown, and we know that this is going to happen here. And oil prices also are important, because if they come back to some extent related to what we saw today, that might help to some extent. But in general, we are going to see a slowdown. I'm not sure whether it's going to be a significant recession.
Mr. Drummond, you mentioned off the top how Alberta's coffers are hit even harder because, of course, the price of oil also affects the royalties at the end of the day that they take in. How big of a hit do you imagine they'll be taking right now?
Well, it's several billions of dollars if the prices were to stay down at this range. And as you indicated before, it's not just the weakening of the economy, but you've got some unruly behavior, let's put it that way, from some of the oil producers. So this may keep the prices down for a while. And at some point, it may make it not possible to balance the budget and the schedule they put together. It's great. Alberta tends to have a high level of government spending, and it's not a bad thing to rein that in. But you can create, like Italy did and Greece did to some degree, if you keep cutting, you keep weakening your economy at the same time. So they may find themselves in a box that's rather difficult to get out to. But it's coming back to the recession, though, economists love to have leading indicators, and it's very sad to say, but the leading indicator we should all point to is the geographical spread of virus infections and the number of infections, because that's the thing that's scaring anybody. If those numbers get contained geographically, and by numbers, I think there'll be some confidence it could be back. But of course, it hasn't happened yet, and it keeps spreading. And that's going to keep people very worried, and that's going to have real economic ramifications. Fewer people traveling, disruptions of supply chains around the world.
There has been a really big impact on the economy already over the last 24 hours and in the days that preceded it. Specifically, U.S. stock markets today saw their worst drop since the 2008 financial crisis. The TSX is down nearly 10%. Jean-François Perrault is a senior vice president and chief economist at Scotiabank. He joins us in studio to help break some of this down. Hi, Mr. Perrault. Thanks for coming in. Really appreciate it. So when I read out those numbers, I think there are a lot of people who have a lot of investments, including a lot of savings for retirement, who are very worried about what they witnessed today. What is your assessment?
Well, you've got a situation where the markets are really reacting to very little information. Obviously, we had the OPEC decision, the lack of OPEC decision last week and Saudi Arabia's decision yesterday, which from a Canadian perspective was extremely meaningful. I mean, we are an energy powerhouse, like it or not, and a 20% drop in the price of oil in a day is a major, major development. But that's not the only thing driving markets. We had, and we've been seeing for quite a while now, a couple of weeks, persistent declines in equity markets. And the challenge there is we don't know where that's going to stop, right? Equity markets have been reacting to, a mixture of fear about what it means for the corporate sector, but they've also been reacting to lack of information, a lack of sense of direction on the part largely of U.S. policymakers. Where are they going to take the containment efforts? How serious are they about controlling the impacts of the virus as opposed to worrying about, say, public relations exercise or the value of the markets? Hopefully, maybe President Trump's press conference today and the things that will come in the next couple of days will, give enough comfort that maybe things are going to be a little more serious going forward. But we haven't seen that yet.
So am I interpreting right that the markets are kind of reflecting the uncertainty that's out there right now?
Oh, tremendously. Yeah. So, so you don't know how to price corporate profits, for instance.
Right.
You don't know how bad this is going to be from a virus perspective, like how many Americans are going to be hit. What's the count going to be? Is it going to increase dramatically? It should, if it follows the pattern in any other country. And there's a sense that policymakers don't have their hand on that. Like, for instance, we have in Canada, or for instance, they have in Korea, or obviously China to some degree.
So what, if that is the case, is it fair to say that nobody knows where the bottom is?
Well, that's the fear, right? And I think that's partly why the Federal Reserve acted last week, partly why the Bank of Canada acted last week. They were basically, the first responders in an economic setting. Markets were worried about what's to come. Nobody was doing anything. Fed basically came and said, well, we're going to try and give you a bit of comfort in terms of somebody out there watching the economy's back. And of course, the Bank of Canada did the same thing the very next day.
Beyond the markets, what about the economy specifically here in Canada more largely? Today we heard, for example, the federal government, Dr. Tam, the chief public health officer of this country, say, don't get on a cruise. My guess is, I was traveling this weekend, there was nobody on the roads. A big mall in downtown Toronto was as empty on a Saturday as I've seen it on a Tuesday. Like, there's got to be some real economic impacts of what's going on beyond just the markets.
For sure, right? So people are worried. They're fearful about their health. They're worried about getting exposed to the virus by going shopping, taking the plane, taking the subway. There's no question that in and of itself is going to lead to slower growth in Canada. The bigger and almost more important issue, though, is the impact of equity markets and the impact of oil prices on the economy are really quite substantial. So you can tweak your Canadian forecasts. They will have a little bit slower growth for retail sales or accommodation or this, that. But given the importance of oil prices to Canada, a 50% drop is a huge deal.
Can you talk about what you mean by substantial? So we saw today, the biggest drop since 1931. What does that mean in real terms for the economy that Canadians know?
So roughly, a roughly 10% point decline in price of oil is about 0.1% on Canadian growth. So, a 50% fall is about half a percentage point.
And we'd seen growth almost slow to snail's pace.
And we were starting, we were starting the year at, for a forecast of about 1.5 for this year. So, it comes down, you don't have a whole lot of cushion. So that takes down growth pretty fast. And that's just oil prices.
How do you know if, I imagine it's difficult to predict, but how do we know how long this drop is going to last? And at what point do we recognize, okay, this has been a low price for enough time that this is going to do real permanent damage?
So I think that's the challenge with the decision over the weekend, right? There's a sense here that obviously, folks are reacting in real time, but there's a sense that this is a little bit different, that the Saudis and the Russians are not going to cooperate anymore, and therefore, increased supply at a period of weak demand, and that's very worrisome because it's not. This is not following kind of economics 101. This is, you're doing exactly the opposite of what you should be doing in these circumstances. So it's scaring markets a lot. So you've got this 20% fall. And I think at this point, people are expecting this to have quite a bit of legs.
And what does that mean? I know we've talked about what it means for the economy more largely, but specifically for Alberta, where not only do they depend on tax revenue, but they depend on royalties as well.
Alberta obviously is going to be by far the most affected. Oil prices oil is good for the entire country. Again, whether you like it or not, that's just a simple economic fact. Clearly, Alberta benefits far more from oil than the rest of the country does. So you're looking at possibly recession in Alberta. There's no question about it. Oil prices are at levels that nobody anticipated a couple weeks ago. Alberta had a budget recently where even in the budget that they had said, there's a rider here. We're not incorporating recent developments, and recent developments since then are much worse than they were in their budget. So it's there's no question this is going to be a tough time for Alberta.
And what do you think about where the federal budget is concerned? We've been talking about it throughout the show, but we know that they're in that process of, normally the budget actually would be kind of pretty much done by now. They'd be releasing it in a few weeks. They have a lot of sort of changing factors to deal with. What do you anticipate?
So we're looking for stimulus. It's pretty clear to us that growth is going to be significantly lower than they anticipated. It's pretty clear that the downside risks are pretty high, and as a result of that, I don't think you want to take any chances. I think you want to try to get ahead of things. So, we're probably going to build in a significant amount of stimulus coming in the budget.
What does significant mean?
At least 1% of GDP, maybe 2%. So 20 to 40 billion dollars.
You think 20 to 40 billion dollars. So that's on top
I mean,
of...
there's not really any point doing anything less than that.
Right, and we had Don Drummond on a bit earlier saying something similar. Essentially, if you want stimulus to make a difference, you're looking at that 20 to 40 billion dollar range, which would increase the deficit, which is already sitting at about 26
You're starting,
billion
probably
dollars.
close to 30 now, and you add 40 billion to that. It's a big number.
The minister insists that Canada and his government have the fiscal capacity to do so. What do you think?
I think so. I mean, folks will debate as to whether or not 20 or 30 billion is a very large number. In reality, relative to other countries, it's not that big. It's about 1% of GDP. There is scope to do a lot more than that. I mean, the U.S. right now has got a deficit of 4 to 5% of GDP, and they're not even in the middle of a recession, right?
Not yet, anyway. All right, I'll leave it there. Thanks so much, Mr. Perreault. Appreciate it. That's Jean-François Perreault, Senior Vice President and Chief Economist at Scotiabank. Hi, I'm Vashi Capellos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video.